Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. Minutes from the December 2024 FOMC meeting revealed that nearly all Fed officials believed upside risks to inflation had risen, driven by stronger than expected inflation data and potential impacts from anticipated changes in trade and immigration policies. The Fed had signaled just 2 rate cuts in 2025, totaling 50 basis points. Employment data for December showed that non-farm payrolls added 256,000 jobs, the highest in 9 months, following an addition of 212,000 jobs in November. The unemployment rate decreased to 4.1% in December from 4.2% in November. This week, December's inflation data will be released, and it is predicted to record a growth of 2.8% year-on-year and 0.3% month-on-month, compared to the inflation rate of 2.7% year-on-year and 0.3% month-on-month in November. Retail sales data for December will be released this week, and it is predicted to grow by 0.5% month-on-month, compared to the 0.7% month-on-month growth recorded in November. China Zone. The Q4 GDP growth data will be released this week, and it is expected to grow by 5.1% compared to 4.6% year-on-year in Q3. Indonesia Zone. Foreign exchange reserve in December were recorded at $155.7 billion, an increase from $150.2 billion in November. Consumer confidence in December rose to 127.7 compared to 125.9 in November. Retail sales in November increased by 0.9% year-on-year compared to 1.5% year-on-year in October. Auto sales for December has been released. Motorbike sales dropped by -5.5% year-on-year compared to -10.3% year-on-year in November, while car sales declined by -6.4% year-on-year compared to -11.9% year-on-year in November. Some data will be released this week. The trade balance for December is expected to record a surplus of $4.33 billion compared to a surplus of $4.42 billion in November. Loan growth for December is projected to increase by 10% year-on-year compared to 10.79% year-on-year in November. Bank Indonesia will hold a meeting, and it is projected that there will be no interest rate cuts. Market view. Jakarta Composite Index decreased by -1.05% week-on-week to 7,088.87. The JCI is expected to enter positive territory this week, with domestic data potentially acting as a catalyst for the index, including the trade balance for December, loan growth for December, and the results of the Bank Indonesia meeting. Foreign investors recorded a net sale of 2.12 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 2.94 trillion Indonesian rupiah. The 3 sectors with the declined returns were basic materials, transportation and logistics, and properties and real estate, which decreased by -3.74%, -2.49%, and -1.69%, respectively, on a weekly basis. On January 10, 2025, the yield on a 5-year benchmark government bond FR0104 rose to 7.06%. The yield on a 10-year benchmark FR0103 also increased, reaching 7.14%. Similarly, the yield on a 15-year benchmark FR0098 climbed to 7.20%, while the yield on a 20-year benchmark FR0097 advanced to 7.33%. The yield on the 10-year Indon bond Indon 34 rose to 5.52%, while the 10-year U.S. Treasury yield increased to 4.76%. Compared to their levels on January 3, 2025, which were 5.41% and 4.60% respectively. Indonesia's risk premium, as reflected by the 5-year CDS, climbed to 80.79 basis points. Meanwhile, the rupiah remained largely flat, declining by -0.04 week-on-week to 16,190 Indonesian rupiah. As of January 9, 2025, foreign ownership in the government bond market was recorded at 880.47 trillion Indonesian rupiah, 14.52% of the total outstanding, an increase from its level on January 3, 2025, which stood at 877.84 trillion Indonesian rupiah, 14.53% of the total outstanding. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, lowering the benchmark interest rate by a total of 100 basis points year to date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2024, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.